Hi class, and welcome to the bonds demonstration video number 2. I did mention that I was going to demonstrate exercise 14-22, but I failed to mention that that was convertible bonds, and that's something that we're not gonna touch in this chapter. So that one's out of the question. So the only two that I'm gonna be touching on in this video is 14-11 and 14-21. And this is going to be on the early extinguishment of debt. Show you the accounting for that, what they do, and how they record it. And this then starts on page brief exercise 14-11 starts on page 837. Okay. A company retired 60 million of its 6% bonds at 102, 61.2 million before their scheduled maturity. At the time, the bonds had a remaining discount of 2 million. Prepare the journal entry to record the redemption of the bonds. Okay. All right, so we know that we're going to retire the bonds. So we're gonna take them off the books at the face amount. And it's for 60 million. Okay. We know that we're going to take the discount. We know that we're going to pay cash. And the cash is going to be the 60 million times 102% because they were sold. The company retired 60 million of 6% bonds at 102. Okay, so it means it was a premium. So 60,000, 60 million. Okay, should be 6.12. Let's see here. That looks better. Say 61,200,000. Okay. We also have to take the discount off the books. And it was a given amount. Usually if it wasn't given, what we would do is go ahead and calculate what the current discount on the bonds usually is. Okay, so we would take like the initial discount of the bonds minus what has been amortized, and that's what you would put in, what the balance of the discount. Okay, our credits and debits do not add up. Our credits is 63,200,000, and our bonds payable, the face amount is only 60 million. That means we have a loss. Okay, at the extinguishment, when we extinguish these bonds, we occurred a loss on early extinguishment. Okay, so basically what we would do is we would take that amount plus this amount minus that amount. So we had a loss, we incurred a loss of $3.2 million for this transaction. Okay, so that's brief exercise 14-11. For exercise 14-21, this is going to be on page 841. It's going to be on the extinguishment of debt as well. The balance sheet of Indian River Electronics Corporation as of December 31st, 2012 included 12.25% bonds having a face amount of 90 million. The bonds had been issued in 2005 and had remaining discount of 3 million at December 31st, 2012. On January 1st, 2013, Indian River Electronics called the bonds before their scheduled maturity at the call price of 102. Okay, so once again, I'm going to take the bonds off the book. So bonds payable is going to be debited at the face amount. Okay, and it was for 90 million. I know that I'm going to take the discount off as well, and it was given, and the discount is $3 million, and I know that I'm going to be paying cash. The 90 million times the 102%. Okay, so let's do that. 90 million times 1.02 should be 91,800,000. So once again, our debits do not equal our credits. So our credits, it's 94,800,000, which is larger than our debits. We know that we have to debit loss then. So we also incurred a loss on the early extinguishment of debt in this situation. Okay, so we lost $4.8 million in this situation here. But that's how you would take everything off the books. You would take the bonds off the books, take the discount off, pay the cash for the bonds that have been issued, which is the 90 million. They bought it at 102. Okay, even though they only give you 90 million, you're paying 91,800,000 because it was bought at a premium 102. And then basically you incurred a loss on the extinguishment of $4.8 million. Okay, so that's this one for the early extinguishment. This is the accounting for it. These are the journal entries that you would make. If you have questions on this, make sure to email me or give me a call, and I'll get back to you as soon as I can. Other than that, these are the videos that I have for this learning plan. We got 2 videos for chapter 13 and 2 videos for chapter 14. You can go ahead and attempt the graded home, practice homework first and then the graded homework. I don't know if I mentioned this before. I think I did mention it in the class information video as well, but homework is only 1 attempt. I want to be on the same page as the instructors that do teach this class as well, so we're all giving 1 attempt for the graded homework, but you do have unlimited attempts for the practice homework. So just make sure that you've got everything down packed before you attempt the graded homework. Once again, it's only 1 attempt. I do apologize if I did mention it before that it was 10% for a second attempt, but it's no longer true. In accounting 4, it's only 1 attempt. Okay, good luck.